What's going on, everybody? Welcome to the Stock Market Brief Show. My name is Michael Silva. This is the show that we use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. What happened today? Holy cow, do we got to break down some of this price action. Talk about a wild and wacky day. I got some things that I want to talk about. Got a lot of charts. I want to keep it to the point. I'm going to have timestamps in the description below. We're going to be going over the indices. We're going to be going over some indicators, commodities, the dollar, bonds, yields, and then I'm going to wrap everything together with a conclusion. So let's just go ahead and hop right into today's show. All right, everybody, welcome back. We're going to start off here with the indices, looking at the S&P 500, and as we go through the other indices, I'm going to bring on a couple other indicators and also talk about some wild and wacky price action, mainly around the NASDAQ. Yeah, we'll get into it. S&P 500, pretty much pushing to an all-time high. We tagged the 20-day moving average. That acted as support. Real bullish-looking candle. A lot of weird price action today. This looks like it's going to be going and tagging the upper Bollinger Band. The upper Bollinger Band is right there at around 445. Where is it at? It is at 4,451. Definite possibility to go tag that and act as a level of resistance. Overall context still remains bullish. Here's the SPY. Now, the SPY has been in this channel. And as we saw today, it started really selling off early in the day. And then it got bid right back up. All right. We just need to wait patiently to see this channel break. If it breaks to the upside, which is around 442, let's call it, then we can go higher. All right. If we start cracking down through this level of support, then we can potentially obviously head lower. Always watch for these bear traps and bull traps. But as it stands right now, we're range bound for the last 1, 2, 3, 4, 5, 6, now 7 days. And we haven't gone anywhere, okay? Just ping-ponging back and forth. Wait for a break of either direction to feel a little bit more confident to get some momentum in a trade. We are above the 5-day moving average. You can just see here this like algo type move. It just kind of just kept on getting bid right back up. Now we are getting a little overbought. We'll see where the market opens. It'd be better for the market, to be honest, to gap down and then recover, to have dip buyers step in and algos dip or algos buy in, and then we start moving up higher, versus gapping way out of this channel and then all of a sudden selling off because we get a little bit too overextended. If we do gap above the channel, look for a pullback to close the gap, and that gap can act as gap support. A couple interesting things taking place. We talked about this in my yesterday's video. This is a contracting. We're seeing the Bollinger Bands contract, and contraction could lead to expansion. Now, we mentioned that this potentially could actually be bullish because we were at the upper range, tagging the upper Bollinger Band. And look at this. Today, tagged the upper Bollinger Band perfectly, and then completely volatility got crushed, and the markets went higher. All right, so over the weekly time frame, we're still at putting in higher lows as it stands right now. That can change. We might put in a lower low here this week, potentially, if it keeps dragging down, but we're still relatively trending higher and higher here. So that's something to still be cautious of. And we did put in a higher high as well now from the previous week. Okay. Still, Bollinger Bands, like I said, tightly contracting. If we go to the 30-minute time frame, look at this. Bam, bam. Blew out here, but back tested. Bam, bam, bam. This level, 2050. I don't know what's up with that level, but if we start breaking through that, hold on to your chairs, because some of our positions might get blown to smithereens. Who knows? Like, a big volatility spike past that can be quite traumatic. You can just see how it's been just like every single time we come up to these levels, the VIX gets crushed, okay? But in the shorter term here from July, we've been putting in, just building up. This is, higher low, higher low, higher low, higher low so far. Okay, so that means bulls here are making progress, VIX climbing higher, but yet the bears are holding down their fortress over here at 2050. Okay, on a good note here for the bulls, equal weight broke out to and closed at that all-time high. Finally, it's been range bound, so this is a good sign so far. You want to get a couple of days above this range, right? Not just some fake out and then falls back within the channel. But that is good news for the bulls to see equal weight do that. XVG has not confirmed an all-time high and this is still a divergence, but this little hammer candle here, you know, if we get right back above the 50-day moving average, this to me looks like it has potential to start heading higher. So that's a good sign for the bulls. Dow Jones, sheesh, almost hit an all-time high today. Just a massive green candle. It had a little bit of weakness right where the 20-period moving average is, and then we closed pretty much top tick close right there, which means we close at where, you know, we don't have an upper wick, shaved head candle or something they call it. I'm going to continue to wait for confirmation of a breakout. If we get a breakout, this thing could scream completely higher. Everything's in bullish context here too as well. Take note that the momentum still kind of lackluster right here, but that, like I said, its price action hasn't been going anywhere. And if you look at the 15-minute time frame, we are above the 5-day moving average, so that's good. This could be a broadening wedge, a little megaphone right here. So keep an eye out that if we do start breaking above on the Dow, we still have resistance just above this previous candle if you're paying attention to this trend. So on the DIA, it's looking at like 352.50 would be an area of resistance to just be mindful of. As you can see, it's been pretty spot on here. In these last, 1, 2, 3, 4, 5, 6, 7, 8 days of trading. Okay, transports have not broke out or confirmed an all-time high with the Dow Jones Industrial, so this is still a divergence. However, if we do start breaking out, that would be a very good sign for the industrials. However, like I said, it would still be a divergence, and we'd want to recapture this 50-day moving average. You can see transports, the 50-day moving average is declining, so the trend is getting weaker as time progresses. Meanwhile, the Dow Jones Industrial's 50-day moving average is inclining, which is really telling us that this trend is getting stronger. So in order for these to kind of sync back up, we need to see the transports really start to see some power here. NASDAQ 100. Okay, this is where it's crazy, right? Big old W right here for what the heck is going on? Talk about a wild day. Look at this gap, just ripped and then just sold off. Bam! Just looks super strong. And and by the way, I was holding puts overnight. If you follow me on the Discord, you would have got alerted for those puts. I just bought a single one. It's just for a small account. I don't really like trading single options. I do on occasion, more intraday basis than anything. But if I hold like a single put, a short-term time frame, the odds are always against you. If you just look at the probabilities and you look at the break-even point, you're always below 50%. So, it's a casino there. I mean, you can get lucky, you can do great, but if you play the long course of time, I mean, you're playing against probabilities. It's not the greatest thing. I'm going on a rant. But yeah, we did hold them, and then this morning it shot up, and then all of a sudden just sold off, and those printed like around 100% or something like that. But then we just got bid right back up, and then it fell and rolled right over. Then we got bid back up, and then it rolled over, and then right here, right at around 11 o'clock, 11:30. This is, by the way, if you pay attention to a lot of the indices, they start to find their footing right at around 11:30, this zone in here. And geez, talk about just a crazy move in the NASDAQ. And if you just look at the chart of Amazon, it really played a big part in this. You can see, we ripped up higher, chop, and then we fell, and then this thing just ripped, pennant, bam, bursted. Now it's forming another bigger wedge. This is just a 1-minute time frame to give you good context here, but holy moly, just a wild and wacky day. But something cool about Amazon that I wanted to point out is the range that it's been in, and we finally broke out of it, and we're like, okay, now let's wait for a back test, and then it moved up higher, and then we just got this crazy gap down, right? By the way, this price action is that day right there. That little day right over there, that little candle. But what I want to call out is we've been in these ranges before and broke out, and we had big moves to the upside follow shortly after. However, what's also interesting is look at this range, and when we broke out of it, similar to this, we had this big gap down, and then we fell back within the channel and then recovered. And we're seeing something actually pretty similar where we, got out of the channel, we're kind of retesting, it pulled back, retesting, move, and then we gap back down right into the channel. So it's going to be interesting to see how this plays out. But, we had a very similar type channel here in 2019 to the pandemic, right through there. That was the pandemic kind of cracked back down. So interesting price action, to say the least. NASDAQ 100 on the daily time frame. Overall, tag the 20-day moving average. That is being held as an area of support. Formed a nice little hammer candle right at around all-time highs. We'll get into semiconductors here because they played a big part. in the strength of the NASDAQ. The Qs on the 15-minute time frame. We broke down through this channel, bam, fell, and then we tagged the lower trend line and started moving higher. We're back above this little volume profile here, this shelf, this area of support. So this is something that, you know, if you believe long tech right here, you'd want to be looking to buy specific dips. And this right here is a symmetric triangle. If we start breaking out of this, which we have, but if we get continuance, this can move another $10 from where we are right now. So 366 to around 375, 376 would be more than possible to see the Qs reach there if this holds. So keep an eye out on individual tech stocks. And then here's semiconductors on the 15-minute time frame. Look at this. I mean, we've been seeing some crazy moves in like AMD and various other semiconductors, but we have resistance right here. This is the SMH, by the way. This is semiconductors ETF. If we start breaking above 268, that's going to look really good for the semis and the NASDAQ composite too as well. But that area is our area of resistance. This looks like a, hey, yep, let's buy on dips. If you want to buy a dip, that'd be really nice to see it pull down to 257. That would be getting right to this volume kind of shelf profile here and this previous resistance. And we also have the 5-day moving average that is inclining. So this would suggest, yeah, these are the dips that you want to buy when they make sense from a good risk to reward standpoint. Okay, so if you're buying down here, make sure you have your stop loss that makes sense in a good area, but then also that your potential reward is, I like to look for, you know, I risk 1 unit to potentially earn 3. If you haven't watched my video on position sizing, watch that. I mean, I go into detail on kind of how I look for positions. Russell, let's get into that. Not that one first. Let's go here. We broke down through this little flag, big red day. And in yesterday's video, we talked about, okay, where would you look to start covering? Because that's very important, right? If you were shorting this, where would you cover? Because where you'd cover, you'd get dip buyers and or momentum even potentially, because they see other people start to cover. But if you cover shorts and other people are shorting it, well, guess what? You're going to have a lot of buyers step in. So you have people buying at support, you have potentially people following that momentum, and then you have shorts covering. And look at just today's candle. It literally just a huge red candle day, and then got bid right back up to basically a positive, actually, you know, from around break even, but up almost 0.5%. Overall, though, we're still within this sideways channel consolidation, so nothing really going on here. This hammer candle along lower wick suggests that we can press higher, but we're going to need the financial support in order to do that. 20% of the holdings in IWM is financial, so that's important. Also to note, the Bollinger Bands are contracting. Contraction leads to expansion, so we'll see which way this wants to resolve. It's not a great sign that it cracked down today, but it's not also a bad sign to see it bounce from these levels here too as well. Okay, let's go into IWM on the 15-minute time frame. We still have a kind of a band of resistance right here at 222. This could be a short-term bear flag. We'll see how that plays out tomorrow. So we have resistance. We have the price action moving into that. And then we also have a gap still above us at around 226, which can act as an area of resistance as well. Something to keep an eye on is the BKX, KRE, XLF. Those are, you know, we have the KBW is the bank index. It's looking at 24. The largest in the U.S. institutions, banks, etc. And then we have the KRE, which is the regional banks, and the regional banks do look like they are poised to fall moving forward. They look pretty weak, but financials really, you know, look very weak today, and then all of a sudden they really started moving higher, and this is very it just perplexes me because I'll get into yields here soon, but the bond yields have been falling and bonds have been relatively high, and financials are holding up quite well in this environment, which tells me that if bonds continue to rise, perhaps that leaves some sort of air pocket here in financials to take a sudden hit to the downside rather quickly. But also from a bullish perspective, it's also like, okay, so maybe if they start flattening out to raising the yields, or to the yields start to rise slightly, maybe that just sets banks off completely, where they just go berserk to the upside. But overall, I mean, they haven't gone anywhere, but they're just holding up, right? Just look at this candle and then look to the left. We're looking back to July 14th. They haven't gone anywhere. Okay, we have an area of resistance right here around 124 to 125. The XLF chart looks very similar. KRE looks a little bit weaker. in my personal opinion. Let's get into some commodities right now. We're going to look at Bitcoin. I brought in the Sailor to Shift rotation chart, which was a joke, but it actually works quite well. It actually got us this move right here. Captured some of the move. Ethereum, I'll get into it later. I'm not going to get too much into that, but you can see here we broke through this upper range of the channel. Now we're seeing a little bit of weakness. The 20 days crossing through the 50. Look, there's no confirmation that this is going to start to move higher yet. This could be potentially a little flag right here. We'll see what plays out. What you would want to see if you're bullish Bitcoin is you'd want to see, consolidate a little bit and then take out this previous swing high. Also, recapture this 200-day moving average. So as it stands right now, this can still easily break down. This, Sven Henrik wrote an article. Did he write an article? I can't remember. I think it was Sven. But he talked about the Wyckoff, and people have been using that. But this is actually pretty spot on to the Wyckoff distribution kind of. I don't even know what to call it. I don't study the Wyckoff method at all. But basically what it is, it's showing like accumulation patterns and also topping patterns. And he pointed out that it looks very similar, and then you typically get some just rip, roar, and rally before you start to see more weakness. That's always a possibility, but we just follow price here. So we'll see. It's cool to make narratives and all that stuff, but you just got to follow price because price knows all. Here's the Bitcoin over gold Sailor to Shift rotation. We are still above zero, so the signal is still on a buy signal. Until this crosses down, if this crosses down, then we start putting stop losses on the week, the low of the week. If you haven't watched that video, go watch that video. This is, I forget what I called it, something about Bitcoin indicator. I'll try to link it in the description. I'll probably forget though. But the buy signal is still activated, and I'm still in my position. Copper, down on the day, about 1%. Not the greatest look, but it's still in an uptrend. All right, so we're still trending up. We did break out of this downsloping trend, and now we're flagging again here. Price percent oscillator is losing some steam. That doesn't look all too hot right now for copper, but we'll give it some time to see here what if it wants to take off. Gold is looking rather nice. I mean, it's coiling up tightly here in this little pennant. It did break out of this trend line. It's been holding that level. So we have a lot of support here at around 1800 to just below. So if we start breaking out of this, I think we have another up leg in gold, at least to around 1900 again. I think that is more than possible. If we break out of this little pennant, which is right at around 1820, 1825, 1840, let's just call it 1840. If we break out of 1840, I can see this running to 1900 and 1920 rather quickly. So we'll be keeping an eye on that. Silver's not doing anything. We had a nice big update. I actually caught this update. If you follow in the Discord, we entered into SILJ, and now it's been just kind of just trending lower to sideways. And look, it's range bound. Hasn't gone anywhere. Okay. So we'll continue to monitor it. We had a bullish crossover here on the price percent oscillator, but it is still below 0.2 as well. So just nothing going on. People have been asking, how come you don't usually go over gold and silver? Nothing's been going on. But that's just a little update. Now we'll have a more in detail video here coming out on Sunday because one of my partners, sponsors, is sponsoring a video so I can do a little bit more technical analysis on gold and silver. I love it when I get those sponsors because it helps support the show. Here's the CRB index. Talk about inflation. I mean, it's too hard to say that there's inflation is not here or it's not going to stay, but yet the CRB index, which is a basket of commodities, is just from bottom left to top right. It's moving higher and higher. I will say momentum's been dying, right? From the indicators, price percent oscillator, looks like it's crossing over to bearish. RSI, it's been diverging, but the context and the price, it's still there. Everything is still just chugging along, keeps on moving higher and higher. Let's look at light crude oil here, WTIC. There's a lot of good-looking energy stocks right now, by the way. So if you are looking for individual plays, you can definitely look into some energy stocks. I just posted a couple of them on my Discord channel for my Patreon group, and they look pretty good. So I'm going to probably be trying to enter into a few of those going into tomorrow if this XLE trend here continues. WTIC, yeah, nice little hammer candle, nice little volume bar that came in with this. It's at somewhat of an area of support, but we did give back the 50-day moving average. So we'll see here what happens. But yeah, we had resistance. We came back. We tested it. Now, when we bounced just with fierce bounce, right from here. And now we're kind of just breathing those gains. So we'll see here. If I were to draw just a blue trend line or any color trend line from this peak just down here, I would say that makes sense. If we start breaking above that, which would be 73, 72, we can have another up leg here in oil. Let's look at the dollar really quickly. Dollar's been breaking down, not crazy at all, but since it's reached this peak right here, right at around just over 93, we've been seeing it kind of taper off here a little bit. If gold or if the dollar continues to head lower, that could be really good for risk assets as well as gold. We've had pretty good negative correlation here between the dollar and the S&P 500. Once it starts heading lower, you see the S&P 500 higher. When this goes lower, you see the S&P 500 higher. So it's been correlating quite well. I will say that this is just consolidating, moving sideways. This could be a potential cup and handle, so we'll keep an eye on it. But as it stands right now, it hasn't gone anywhere. Now, if we start cracking above that, then I'd say buckle up a little bit because, there's still resistance up ahead, but we could have a sudden spike there. We could see a volatility spike with it, and then we might see a pullback there in the indices. But I wouldn't worry too much about it. Just enter into individual stocks or investments with a good risk to reward and have stops in place, and then just play the trend because the trend right now is just moving higher. From a bearish perspective on the dollar, we did break out of this inverse head and shoulders, but it did not hold at all. It just reverted, and now we're right back down here. So this right here is that resistance that we want to keep an eye on. We did mention that, but we'll see here if it wants to try to go and attempt to get that again. If it does, this right here would be more of a target, 96 to around 98 for the dollar. Now let's look at bonds and yields. Yields continue to fall down today, not by much, but you can just see here since pretty much mid-May to even June, they've just been dripping. Drip, drop, trippity drop right here, okay? Just falling. This is the 30-year, this is the 10-year. And this is what's perplexing to me is typically in this environment, that's not good for financials. So it's interesting to see the yields fall like this, but financials are holding up quite well. If you look at bonds, it's the same thing, right? They've been just chugging along higher, holding this trend line, just boom, 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 boom. Even an update a day, and financials did just fine. So I don't know what's going on right here. It's very interesting price action. To me, I feel like it's setting up for a good short for financials. I really do, but I just need to see some weakness in the financials in order to, maybe the weakness would come if we start breaking through this resistance here, 153. If we start getting above that, maybe that sends financials downwards, and we'll see more weakness there. Maybe not the XLF, but perhaps the regional banks, perhaps the BKX, maybe XLF. I don't know. But it is just interesting to see that bonds and stocks are completely correlated right now. The markets are moving up higher, bonds are moving up higher. Gold is kind of flat, but it looks like it wants to start heading higher. Everything's going up. Something's going to be wrong. Something's going to probably give. So you just need to be mindful of what's actually taking place here in this market. That's all I got for you, everybody, on today's episode. Just kind of wrap up my thoughts here. Crazy price action. We're starting to see some bigger swings take place in the indices. So you need to be very tactical in this environment. Make sure when you do set up positions that you look for good risk to reward trades, and you have a strategy before entering into these things, because just like today we got some crazy whipsaws, we can definitely see more whipsaws and more craziness going forward. So keep an eye on those channels on those shorter time frames. If we start cracking, that's a good sign. But like I said, just focus on risk first, and that is all I got for you. See you later.